Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Litan, as well as Managing Director of International Content, Emily Parker. Good morning, Emily. Lawrence, ready for another crazy day? Let's get to it.
Sure.
Checking in on Bitcoin, the CoinDesk Bitcoin price XBX index is currently at $38,194. Bitcoin is up about almost 5% over the past 24 hours. The CoinDesk the price ETX index at 2620. ETH is climbing ahead over 8% for the day. The DFX CoinDesk's DeFi index is at 303. DeFi also making advance of about 5.5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. All right, so we're getting a bit of a market bounce, market recovery in the crypto markets. Also, the news of the day has been really interesting. Diem, formerly Libra, Facebook's project, is done, Emily.
Yeah. So here's what's interesting about the whole Diem thing. Like, obviously it wasn't the best idea because, it triggered the alarm of regulators because it was associated with Facebook. But I would still argue that Diem has had a massive impact on the world in that Diem, formerly known as Libra, is probably what spurred China to action on a central bank digital currency, which then spurred a lot of other countries to action in terms of launching or exploring a central bank digital currency. Now we have almost 90 countries looking at a central bank digital currency. So I could say that actually probably goes back to Libra. So in a sense, it did leave its impact
My
on the
money
world.
will spy on me because of Zuck. Thanks, Zuck. Thank you.
Basically.
Well, it's interesting that they threw in the towel. There are a lot of private stablecoins out there, but they felt that, going through the regulatory pathways, it just couldn't get done, apparently. In other news, we also are seeing crazy raises. FTX US raising $400 million at an $8 billion valuation. Its parent company, FTX, commanded a $25 billion valuation last October. And also, we've got a Fed meeting to look forward to this afternoon, Lawrence.
Yeah, as far as the FTX valuation goes, I keep asking the single question, why? If this is a company that just makes a lot of money, almost prints its own money, if you will, why do they need outside funding? That's for another day. But yes, everyone's looking at the Fed right now. They're not expected to raise rates or expected to announce a rate hike today. The market is pricing that in that it's not going to do it.
Right.
March, which is going to be the next meeting, that's a different story. They expect a little bit of a raise there, but I think for the most part, people have accepted their fate. They've accepted that's what the Fed's going to do, and whatever. There's no surprises.
Let's dive further with our crypto markets guest. The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, joining us now to discuss the crypto markets is Michael Safai, managing partner at quantitative trading firm Dexterity Capital. Welcome, Michael. So we have a Fed meeting this afternoon. It could have some potential impact on price movements. So what are you looking out for today?
Well, it's kind of funny. I think everyone thinks us crypto traders are super sensitive to what the Fed does. And while it's certainly a factor we think about, it's something we've known a long time was coming. Everyone's been expecting rates to go up. So it's not really a big surprise. And in particular, our trading style is market neutral. So Fed action, as I said, is a factor, but it's not the biggest thing we worry about. We're more interested in what's happening kind of with crypto exchanges, what's happening in the trenches of trading, and what's happening in DeFi. So that's kind of where we spend our time and cycles learning and keeping an eye out.
Michael, I'm glad you said what you just said because it's something I've been screaming about for a long time, that the Fed is not a big issue in crypto compared to where it is in other markets. But one issue that you brought up in your notes, at least, is that this bounce in Bitcoin that happened over the past couple of days may have been from flows out of DeFi, for instance, and into Bitcoin on its way to something else. Do you think that that's still the case? Is it going into Bitcoin and then eventually going to end up into fiat? We're seeing DeFi up now today. Has that stopped at any point?
Well, it's hard to say, and I think the note about DeFi is it's just a lot bouncier. It does tend to kind of maybe, I don't want to say overreact, but tends to kind of have an exacerbated reaction to what's happening in the market. And there's a lot of reasons for this. I think one of them is structural. One of the really unique things about cryptocurrency is you can margin things in things that aren't dollars or stable coins. And what that means is you can take a margin position in a coin like Solana, let's say, and you can margin it in Bitcoin, and Bitcoin drops 10%. Well, now the value of your margin has dropped 10%, and it's more likely for you to get liquidated, which we saw happen over the weekend to a lot of people. And the problem with altcoins is they often have less depth in their books than something like a Bitcoin or Ether. So you get kind of this downward spiral where the price drops on the DeFi tokens because Bitcoin dropped a little, and then liquidations happen, and so forth, so on and so forth. And that's kind of what we've seen happen over the weekend. I think people did move back into Bitcoin then, but they may be coming back now that they feel that that cycle is kind of borne out, and people who are going to get liquidated have been.
Yeah, I was just going to ask you, do you think that the sellers have finished selling, if you will? Has it come to an end, at least for the short term?
You know, short term is something that it's always hard to say what's going to happen. It's kind of the billion-dollar question, right? And I, sadly, am not a billionaire, so I can't give you a great answer. What I can say is that, you know, we've been trading for over 4.5 years, and I am still often surprised by big price moves. I don't know where they come from. And even doing a postmortem, it's kind of hard to figure out where they came from. And that's, again, why we've adopted the market neutral thesis for our trading firm. With the one constant we've seen across all cryptocurrency markets is volatility. That has existed since the inception of Bitcoin, and it's always here in these markets. So for a market neutral shop like us, we can thrive during sell-offs. And I think it's a really good strategy given the nature of crypto.
Just turning to a different topic for a moment, I'd like to talk to you a little bit about ETH, which is, you know, everyone's been talking about Bitcoin recently. I'd be curious to hear your outlook on ETH specifically. What do you expect to see this year? Is there anything about ETH that people aren't aware of that they should be?
So ETH and Bitcoin tend to be, you know, we kind of put them in the same bucket, but there are slight differences. I can tell you straight away that when lenders are lending, ETH has a little bit of a premium over Bitcoin. It's just a bit more expensive. And that's because it is a bridge to so much of DeFi. And that's what kind of makes it an interesting product to trade, because it's something you have to get in and out of. It's hard to say what will happen with ETH over the course of the year. You know, the cost of gas is remarkable right now. Anything to alleviate that's great. And I think it's going to really help L2s and other L1s thrive.
And in terms of the price of ETH and Bitcoin right now, is there anything you're seeing that we're not seeing in terms of volatility, volumes, open interest? What kind of price action or price target are you looking at?
So we don't necessarily look at price targets, but we do observe volumes a lot. When you're a high frequency shop like us and do a lot of turnover, volumes are key. And the things I've observed is that if you take this same week last year, there was probably 2 to 3x the volume on Bitcoin and ETH. And that's what we really care about. We want to see more volume. This was kind of a sell-off that wasn't too frothy, even though it was very sudden and kind of, you know, traumatic for some people. But the lack of volume compared to last year is kind of an interesting story right now.
Yeah, and in terms of the alts, in terms of the L2s and the likes, where are you seeing the volumes? Are you seeing any increases in any particular coins, or are they all down too? And are there any where you're seeing it dry up a lot faster, a lot more than you would have expected?
I think the alts that have thinner books, as I mentioned earlier, are kind of the ones that are struggling a bit. The ones that had thin books often had a little bit of volume, and suddenly they had a ton over the weekend. And that's hard to cope with because we saw some flash crashes in some tokens that had really promising projects, but the price just got hurt. Most of those are recovering. We've seen that. But that's kind of been the big impact on alts this past sell-off.
All right, Michael, thanks for diving in with us. Appreciate your insights. That was Dexterity Capital Managing Partner, Michael Safai. Coming up, we'll be talking to Animoca Brands and their $360 million raise at a $5.5 billion valuation.
What's up, everybody? This is Spencer Dinwiddie.
And I'm Solo Cisse.
And this is New Money, brought to you by CoinDesk.
All I hear, go get the money. So I go get it. Hate means I do something right. So I'ma let him. Yeah, I'ma let him. Yeah, I'ma let him. I hit the nail on the head. Yeah, I'ma let him.
What we'll see is, money not only being exchanged for this digital currency, but the frictionless movement across borders. It's going to be able to flow as easy as a text message.
Staying true to yourself, right? Like, you've always been true to yourself.
I just want to share that with everybody. You know, you could be yourself in full capacity.
It's our duty to take our visions and be fearless in our pursuit.
Be my most authentic self and show people that, look, I'm an athlete, and yes, I'm also a part of the LGBT community.
My goal is to have, you know, my own NFT, my own entire IP, like my own everything.
You know, how do you think, you know, blockchain and crypto impacts the way you think about it?
I think everyone has like some sort of like, so like, how'd you get into Bitcoin? It's like asking someone if they smoke. It's like, it's like, yo.
Embracing where the world is going. And when the whole world shut down, we saw just how important tech was.
It was more so of my style and the foods that I cooked that kind of pushed me. I wanted to live the lifestyle of an athlete or an artist while doing what I love.
Having that open mind, having that flexibility just allows you to be of so much more service to, you know what I'm saying, youth or society in general.
Gamers, you know, maybe it's because you guys just hustle different.
Anything you want to be great at, you got to put hours and hours in every single day.
All right, let's look at some Bitcoin. The CoinDesk Bitcoin price XVX index is currently at $38,294. Bitcoin is creeping up about 4.7% over the past 24 hours. The CoinDesk Ether price ETX index at 2,627 ETH, climbing ahead over 8%. The DFX CoinDesk's DeFi index is at 305, also making an advance about 6.5%. All right. NFT and Metaverse investment firm Animoca Brands more than doubling its valuation to $5.5 billion in 3 months, raising almost $360 million in its latest funding round, led by Liberty City Ventures, with contributions from Winklevoss Capital and Soros Fund Management. Joining us now is Yat Su, co-founder, executive chairman, and managing director of Animoca Brands. Welcome there, Yat. Thanks for joining us. Quite a long list of titles there. So, just zooming back, we'd like to get your take on the crypto markets, the crypto space right now. Where are we from your vantage point?
So from our vantage point, I think certainly the last year has proven that non-fungible tokens, and particularly in the area of gaming and art, has really brought in a new kind of mass adoption. Right, 3 or 4 years ago, a lot of people moved into the crypto world because they wanted to own Bitcoin or wanted to have exposure to crypto. But actually, this year, what we're seeing, whether it's places like in the Philippines or even places like Hong Kong, for instance, their first experience with what you could call crypto or blockchain is non-fungible tokens. Be it purchasing of land, be it playing games like Axie Infinity or sort of racing, or all of these projects are bringing in mass adoption. Case in point, in rural Philippines, for instance, more people today have a crypto wallet than a credit card, for instance, right? And I think this movement is going to move much faster. Not just because of play to earn, but because we generally engage with culture more than we engage with money, right? It's one of those very interesting human things about us. And so I think finally with NFTs, we have brought in the human aspect, the culture aspect into the world of crypto.
That's the amazing thing of NFTs. It's been able to penetrate a different subsector of society. But I wonder, how does the latest crypto market drawdown, the sell-off, affect your NFT investment strategy? Does it? Are you on a buying spree, or what? How does it impact your company?
Well, I guess the expression "buy the dip" is something that isn't just exclusively for crypto traders, right? One of the interesting things right now is that when you look at certainly the premium NFT-related projects, despite the dip, actually the price has held up well. Now, what's interesting is that actually correlates very much in the physical world. When you take a look at, for instance, art as an example, even though there's maybe a big sell-off in the stock market, the price of Picasso is still the price of Picasso. It doesn't really seem to change. And that seems to be true for things, for instance, like Sandbox Land, right? We did land sales, and that hasn't affected the price. Maybe the currency, like sand, was affected, but the actual net price, if you convert it back to fiat, actually stayed up quite well. When you look at, for instance, the prices of Bored Apes, they maintained, actually, in fact, increased, despite the fact that the crypto markets have been very much sort of on a downturn. So I think there's many correlations to be had in the physical world as they are in the digital world.
So let's talk about the correlations and the relationships, because obviously, as somebody who's just raised some money, you're not going to say your valuations are high, but $5 billion definitely is a big number. What justifies that valuation, and what are you using for comps? What are you using for multiples and comps? Are you pricing yourself against the likes of, let's say, Electronic Arts and Activision Blizzard, or auction houses? What exactly how are you valuing your company against what?
So Animoca Brands is a little different than most companies out there because we're not your traditional business. We have really multiple arms, right? Some people look at us as an investment firm. We're not an investment firm. We don't have LPs, right? Everything is invested out of our balance sheet. So the value of our portfolio basically is accrued into the balance sheet of the company. Examples, for instance, of those portfolios are, we're lead investors in Sky Mavis, that was Axie Infinity, back in their seed series, for instance, right? Or, early in OpenSea or Dapper Labs or Wax or Decentraland, right? And but then we have an operating business as well. So, we're the owners of the Sandbox, or we're the owners of Quid, of Tower, of Gamey, right? So I think we are quite unique in the way that we're constructed. There's another thing about us that is very different from the traditional organization, which is that we use and look at tokens as resources, which basically means we're generally not sellers because we need them to operate. For instance, we need the ETH so we can sort of mint. And when we generate more ETH, let's say, for instance, like in yield farming, we do it as a way of generating resources so that we are able to continue minting, at a low cost or no cost, relatively speaking, as opposed to exiting into fiat. And I actually think a whole new generation of companies are emerging this because they understand that token usage is a resource. We have large reserves of flow because we need to be able to use it, for our applications in flow, for example.
I guess my question is, what kind of metric were investors using when valuing your company to invest in? Was it based off of revenue or assets or margins? What were they doing exactly? What kind of multiple were you selling at?
So actually, it was a combination of both. But I would say that generally speaking, more weight was given to the operating metrics. So essentially, you could say, the operating metrics of the business in terms of its growth is perhaps given more weight than the assets themselves, because our assets are, of course, very crypto heavy and they are more volatile. So I suppose the people would probably provide some kind of discount. But I think that's how we ended up having investors lead with that valuation. And we're fortunate that they came into that. The space for us, if you look, for instance, we reported our financials, for instance, basically, actually just in January for the 9 months, right? And, in the end of November, we had $16 billion of crypto reserves. Of course, that would have been fluctuating, relatively speaking. And then, of course, we also reported our income and our operating numbers. And I think the total income was, if I remember right, somewhere between like close to $600 million. So generally speaking, it's growing quickly. But it's also hard to benchmark, right? It's very hard to benchmark because there's not a lot of companies like us out there for the time being.
So I just want to ask you about some of your specific investments. Like if you look at Axie Infinity, for example. So Axie Infinity, one of the things that caused it to boom was the play to earn element, and the fact that in countries like the Philippines, people were using it because it was, a better way to earn a living. My understanding is that's changed a little bit. It's not quite as potent for actually, earning a living as it once was. And I guess my question is what's the future for this? Do you think that the Axie Infinity will continue to play that role, people supplementing their income? Does it have legs in that sense, or do you think it will kind of pivot to another use case?
So, I think the example, what's powerful about Axie Infinity and generally assets on the blockchain is that because we own the property, because it's decentralized private ownership, in this case of Axies, right? New innovation is built on top and new value is created. What sometimes people don't fully appreciate is that the growth of Axie actually didn't happen because in traditional game space, you'd open up an office in the Philippines, you do marketing, and you'd sort of grow in that market. But actually what happened was that a separate band of people that ended up forming a new company called Yield Guild, right, which is also one of our portfolios, ended up constructing a rental business on top of Axie and created a new business model. in the same way that Uber or Lyft created a business model on the private ownership of cars and basically added new value. And actually, that is what originally drove a lot of the growth in places like the Philippines. So this is something that we think will happen on top of many NFT games because of that paradigm. Now, one thing that's interesting is that with this billions of dollars of new value generated across the Axie universe, because they're on blockchain, meaning that the value can flow to other ecosystems, the rest of call it GameFi or NFT gaming has also boomed because people in the Philippines are making a fair amount of money from this. Not all of it goes out into fiat and living. A lot of it goes into investing in other projects to generate yield. The Metaverse worker today doesn't play one game. He plays 5, 6, 7 games. He tries different things. It's not unlike the gig economy in the physical world, except now he doesn't have friction. He doesn't have to move, from his, morning job to his driver job or do his teaching job afterwards. He can just simply do this on his computer.
So we've asked this question to several metaverse investors. The metaverse in a lot of ways is a bet on the future. When you look at some of these games right now, they're not super accessible to the mainstream, right? I mean, I think Sandbox is a pretty good example. Like if you look at their alpha round, it was pretty expensive just to get in. It's not super easy for the average user to kind of get involved with this action, right? I don't know if you disagree with that, please correct me. But I guess my question is like, when do you think that's going to change? Like when are some of these games, if you will, like when will they become more easy to use just for like the average consumer?
Well, I think there's a few points, right? The first one is that a game like Sandbox is basically designed really for people who are already aware in crypto. Although I have to say that, in places like Hong Kong that we anecdotally meet and talk to, the very first experience in crypto is, oh, I have some sand, or I just bought some Sandbox land, right? So that's kind of happening there as well. But I would say it's also about the motivation and the reason to do it. You look at places like the Philippines, in rural Philippines, right? This is not your typical market where you kind of say, oh, look at the crypto adoption that's happening there, right? They're not people usually considered to have very high education, although their English is perhaps very good, right? They're not necessarily considered to be very financially literate people. And, basically all the growth is happening in these places, which basically means that if you have the right motivation, then it's okay. One of the powerful things about motivation is that actually opening up a MetaMask wallet is actually much, much easier than opening up a bank account. Actually, opening up a MetaMask is easier than playing a tutorial of a new game, right? If you think about trying a new game, it's actually very complicated. So I think this is sort of the power of game design as well, that it can bring people, and we really believe that it's going to bring mass adoption because it is something that, designed well can make it smooth and sort of relatively painless experience to get into.
So as an investor, where are you finding the values right now? You were talking about new business models happening in this space. What exactly do you think is undervalued, and what do you think is overvalued, for that matter, while you're deploying capital to invest?
Well, I mean, given our investment style, if you're paying attention to how we're investing, sometimes doing several deals a week or more, we remain very, very bullish. In fact, if markets are down, that's great. We love it even more because that means we can invest more, for instance, which was our strategy back in 2018 and 2019 when we got into the field in a very big way. So to us, this is an opportunity. The macro to us just seems very logical. There's really, if you think about a DeFi space and blockchain gaming, we're still just talking maximum like tens of millions of people, right? There's 4.6 billion people online. There's 3.2 billion people playing games, right? So these, from our perspective, 3.2 billion people who already have a relationship with virtual assets as if it was one of ownership, even though it's completely rented. And so we look at, for instance, the gaming industry that has about $100 billion of rental goods that are being sold. What happens when you change the rental economics to one of ownership? That's actually what's happening with blockchain gaming, for instance, right? Where people look at that and say, oh, how can you possibly pay that kind of money for, a virtual car, for instance, was, we had some of them auctioned for like $360,000 US, which is the same as a Lamborghini, except a virtual car actually makes you money and a Lamborghini is a depreciating asset, right? So those are some of the things that people start to understand, and then it becomes really a solid or sound investment from their perspective, one that can also be fun.
I wonder your thoughts on the Web3 debate, and this piggybacks off of Emily's comment, about accessibility. And this has been raised by Jack Dorsey, that the Web3 world is becoming more centralized with more VC funding. Is that something you agree with? And is that a bad thing or good? Or what's your position?
Well, the way that we look at the growth of everything happening in blockchain and Web3 is like entirely like the construction of new nations, right? Whether this is Sandbox or Axie or what we're doing with Rev Racing or even games like Phantom Galaxies, we're really creating new communities, and the token infrastructure provides energy and value into those communities. So then it comes about, because these tokens also represent governance into the ecosystem, then it's a question of how you distribute it. And so the criticism, of course, is that if you're raising a lot of money from VCs, then they're the ones who end up having a lot of control, right? And the criticism then, of course, is that they reap all the benefits, and then basically the consumers or the end users are the ones left holding the bag. So really, the strategy around this is, like any kind of nation building, is how do you build it up in a way that is equitable? So you look at the white papers, for instance, you say, well, how much goes to the community versus how much goes to investors? If, for instance, 5 or 10% of the supply of the tokens goes to investors and the majority goes to the community, 50% that you can earn over time, then even though the investors are putting money to kickstarting it, you can still earn it over time playing the game, meaning that there is a way for your labor to be rewarded, right? So what Web3 is really a fantastic and incredible experiment in designing new consensus for the future. We got there from going from feudalism into democracy, but then from democracy, we had different kinds of democracy, representative, or, all sorts of different formats, right? Democracy in Europe is actually quite different than democracy in the US, but they all serve a purpose here, which is to try to build a consensus mechanism to basically run their particular societies better. Tokens is exactly that. And I think we're going to see many, many more emerge as we try to optimize this experience. And so I think Jack Dorsey's criticism on Web3 is just because he sees what he sees now relative to his position on Bitcoin, right? Which of course has a very, very different a mechanism that he thinks he's judging it, I think, from where we are today. But where are we going, right? The society's democracy didn't build overnight. Neither will the consensus of the token infrastructure that we're seeing today. We're not done yet, right? We've still got a few billion users to go.
Well, I hope it goes in the right direction then. All right, Yat, thanks so much for joining us, and congratulations on your raise. That was Yat Su, co-founder of Animoca Brands. Coming up, checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day. And what's a better money for criminals, dollars or crypto? Gartner Research has an answer for us next for Privacy Week.
Hi, I'm Jen Sanasi, co-founder of Streambed and co-host of The Hash. You're watching CoinDesk TV.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. You've got a lot on your plate. What's cooking?
Good morning. Yeah, it's been a busy week, and it's going to be a continuing busy week. In the next couple of days, we're going to see hearings from the Senate Banking Committee to speak to the remaining nominees for the Federal Reserve, which includes Sarah Bloom Raskin as vice chair for supervision. Sarah Bloom Raskin's former assistant or special advisor, Adrienne Harris, was just yesterday confirmed to be the next superintendent of the New York Department of Financial Services. And we found out last night that the House Financial Services Committee plans to hold a hearing on the president's working group report on stablecoins. And that will be in about 2 weeks or so. So lots coming up.
So, Nick, to paraphrase from Prince, when doves cry, in this case, it's when hawks cry, right? Because you have three, you have three nominees there going in front of the Senate, and the hawks aren't necessarily thrilled, are they?
No, I mean, we're probably going to see some of that come up during the Senate Banking Committee hearing, which is on the 4th. And we've already seen some lawmakers express concerns about the nominees and their positions on various issues. Although so far, I've actually seen more concerns about issues like climate change than necessarily the fiscal policy, interestingly enough.
All right, Nick, thanks for the update. You can read more on your newsletter. Thanks for joining us, CoinDesk Managing Editor of Global Policy and Regulation, Nick Day.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
When it comes to following the money, it's easier to follow the crypto trail than the dollar trail, according to Gartner Research cybersecurity expert Avivah Litan, who argues that criminals can run but not hide in transparent cryptocurrency networks. Joining us now is Avivah. Welcome, Avivah. Thanks for joining us. You have an article out on CoinDesk.com. Criminals still find it easier to hide in fiat than crypto. Tell us what you found.
Well, if you look at cryptocurrency networks, they're completely transparent. There's 23 blockchains that constitute about 90% of the market cap. And if you're a fraud detection company, you only have to go to 23 systems and follow the money trail. If you're looking at fiat currency, you have to go to thousands of isolated systems from payment processors, banks, enterprises, and try to figure out how to look at the patterns across all these siloed systems across the world. So the truth is that it's much easier to follow the money trail on blockchain than it is going through the spaghetti code of banking and payment networks.
So, Avivah, this is good news, obviously, for law enforcement. But I mean, just looking at it from the perspective of the average retail trader, the average consumer, say they're buying Bitcoin through an exchange and maybe transferring it later to a wallet. Do they have any privacy protection at all? Because like the flip side of this is like cryptocurrency is supposed to have increased privacy relative to cash. But like, is that even true?
Privacy is not really existent on the blockchain either. Supposedly your name is separate from your address. If you're going through a cryptocurrency exchange, you have to have your name subpoenaed, your PII subpoenaed. But there's already all these darknet information sources that are combining addresses with other bank account, password, email address, mobile number. So you may notice that consumers that use centralized exchanges are increasingly getting hacked because all their data is there for sale, just like it's been for decades. Now the criminals just had to add the blockchain address to the data store. So the notion of privacy is not correct, actually. You actually have less privacy. And now there are some privacy protocols that are trying to mitigate that, make you more anonymous. But in the end, you'd have to hide the blockchain address. And you can't hide the blockchain address unless you go through some centralized party that's going to do that for you. So this notion of privacy doesn't really exist in reality. Now, that doesn't mean that the... Yeah, go ahead. Sorry.
No, go ahead.
That doesn't mean that the criminals have an easier time in blockchain than they do in fiat networks. I mean, the criminals can steal data in any of these systems. They can figure out who you are, whether you're using a bank account or a cryptocurrency address. The difference with blockchain, it's easier to catch them. And some of these centralized exchanges that consumers use should start protecting the consumers more. They should start blacklisting these addresses before the crime occurs. So there's great companies out there that are performing the analytics around the money trails, and they know which addresses are suspect. They need to democratize that technology, so to speak, let the consumers use it themselves so they don't go to bad addresses. The exchanges need to use it before money's hacked out of their account. But the actual infrastructure, it's easier to catch the criminals. And we even saw that with the Mueller report. You know, he was able to catch these hackers from Russia in part because they used Bitcoin, and he could trace the addresses if you look at the report. So when the regulators discuss this, they need to look at the facts, look at the evidence. The evidence is that the money trail is transparent. If you have good analytics, you can see where it's going. The trick is protecting consumers with that information, protecting traders and investors. And that hasn't exactly happened yet.
Yeah, I mean, much of what you're saying is pretty well documented, right? Like, this has been something that people in the crypto industry have been saying for years. As you mentioned, there's many companies that do this for a living. They track blockchain transactions. So why haven't regulators really gotten the memo on this? And why hasn't the mainstream gotten the memo? Because it's still such a popular trope to say that, you know, Bitcoin is a haven for criminals and crypto is the best way for criminals to interact. It seems like this is something that at the government level, people still don't really understand. They still see Bitcoin as this like dark, shadowy network where anything can happen.
Yeah, I know. Even my friends, lots of people think that. And if you look at the volume of illegitimate transactions, I think a recent report said it's 0.15% or not legitimate. I would think the reason the regulators and the general public still think Bitcoin's a haven for criminals is just there's nobody marketing Bitcoin. There's no PR agency because it's a decentralized system. Same with all the DeFi protocols and Ethereum. There's no one out there educating the public and educating Congress. So you end up with all these distortions. In fact, the Russian government used this distorted argument to try and ban crypto, which they're doing in their country by saying this is just a haven for criminals. So it's a little bit like the energy consumption and the understanding that it's really just proof of work, not proof of stake. The miners don't have a PR agency. The validators don't have a PR agency. So we need more education in the market so people understand the truth and the facts.
So Avivah, getting back to what the criminals are doing, what are they doing wrong? What's the one thing that criminals get wrong about crypto? Asking for a friend.
I think when they go after these big hacks like DeFi protocols, what we saw with Badger DAO, for example, and this is well talked about, they steal too much money and they become a target. So if they're taking $500 million out of the system, they're going to have everyone all over them, following them and investigating, and they can't get the money out of the system. So they're very greedy, obviously, and when they go after a lot of money, they get the headlights on them. And maybe I think we're starting to see a shift towards smaller hacks. I'm not sure. I don't have the data on it, but something says to me that that's what's happening. So they need to fly under the radar, basically, and that's what they're getting wrong. When they fly over the radar and they commit these big hacks, they get stopped. And you saw that. They gave money back.
So like there is a threshold, you're saying, and what would that number be? Just asking.
That's a good question. Maybe 10 million in US dollar value. I'm not sure. It's the same thing like when you get hacked and you go to the FBI and say, I lost $300,000. They're not going to do anything about it.
If you go over to 10 million, you're getting a bit greedy. All right. So do you run the risk of, having blockchain Web3 potentially making us more surveilled than ever before? And if so, is there any way to combat that in terms of getting your privacy back? What do you need to do so that your whole transaction history isn't surveilled?
That's a great question. I mean, the truth is, as long as your address is in the clear, there are things going on behind the scenes that you can't control. Just like when you use your credit card at a point of sale, no matter what you do with your credit card, how well you protect it, you can't protect how it's used in the back end. So frankly, the best thing consumers can do, I think, are use self-hosted wallets. If you start getting into an exchange, then even more information is disclosed. Even the travel rule is going to end up exposing a lot more PII data related to addresses. So when you think about it, most likely consumers are better off using self-hosted wallets, and they have to become a lot easier to use. And they should use multiple addresses, just like they may use multiple bank accounts for their really serious assets. They may want to control it one way. They're going to have to learn how to spread out their assets depending on how much they have. But I mean, I've been very disappointed in how some of these centralized exchanges are protecting consumers. There's class action suits going on. And if they didn't use a wallet at that exchange, they'd probably be much better off.
Yeah, a lot of revelations in there, Avivah. Thanks so much for sharing. That was Gartner Research VP Analyst Avivah Litan. She also has an article with us on CoinDesk.com. All right, time now to check in with Twitter for our tweet of the day. This one, we spoke about Tesla CEO Elon Musk goading McDonald's the other day to accept Doge, prompting McDonald's to respond, of course, tweeting only if Tesla accepts Grimace Coin. So, of course, someone out there created a token immediately after called Grimace Coin, which immediately surged over 285,000% in a few hours. That's crypto
Go
for
for
you.
it.
Yeah. Well, that's it for First Mover. Thank you, Emily and Lawrence. I'm your host, Christine Lee. And meantime, check out the Hash at noon Eastern and all about Bitcoin at 3 o'clock. You're watching CoinDesk TV. Next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
Welcome to the Daily Forecast, January 26th, 2022. I'm Megha Chadha of Forecast News, covering all things blockchain. The United States has warned of sanctions if Russia invades Ukraine. But what tactics might President Putin employ, and what could that mean for crypto markets? We'll take a look at that story and a whole lot more coming right up. Let's get you up to speed from Asia to the world. Let's kick off with some of the top stories out of Asia today. First up, financial authorities in Thailand have revealed plans for regulating digital assets as a means of payment. The Securities and Exchange Commission and Ministry of Finance and Bank of Thailand said that crypto as a payment method could impact financial stability and warned that it can pose risks to both businesses and customers through price volatility, cyber theft, and money laundering. Now, the guidelines include a ban on the use of e-wallets by merchants for receiving payments. The SEC says comment is welcome until February 8th, so get in there quickly. And over in Kazakhstan, power supplies for crypto miners have been blocked amid blackouts in the country. One local miner told Forecast News all supplies to them are to be blocked until the end of the month after massive blackouts hit parts of the country on Tuesday. Kazakhstan became the world's second largest Bitcoin producer last year after miners moved there en masse following China's clampdown. But recent protests over energy shortages as well as the blackouts are making it an increasingly fraught business environment. You can find those stories and lots more at forecast.news. Meanwhile, concerns over a Russian invasion of Ukraine continue to mount. President Biden has threatened sanctions, but could an invasion see Russia's President Putin cutting energy supplies to Europe? And how might that hit crypto prices? Forecast News' Carolyn Wright reports.
With a reported 100,000 Russian soldiers deployed in the region, many investors are considering their options. One key issue for crypto is the potential for Russia cutting off supplies of gas, oil and coal to the EU. And while President Biden has a plan to mitigate the risk, one expert told Forecast News there simply isn't the capacity at ports to handle imports of liquefied natural gas.
What you would see is an immediate economic slump in Europe and extremely high energy prices. It just certainly increased the cost of mining Bitcoin. I mean, we know that. But does that actually lower the price? Or does that instability mean people want more of it and you have less supply at maybe a lower cost, but a higher demand?
Roach says his feeling is that if Bitcoin mining is threatened, risk-averse investors will buy fiat currencies like the US dollar instead of crypto. However, another key concern on his mind is the threat Russia's upcoming naval exercises off the coast of Ireland pose to the internet and many crypto transactions.
It is right on top of 7 to 12 global cables going from Europe to America. That's not a coincidence. Cables could be a front line in this thing if it really came to a conflict.
Roach says the data cables are virtually unprotectable and losing them could have a massive impact, as while satellite internet is nice in theory, it would be no substitute for the capacity the cables offer. For Forecast News, I'm Carolyn Wright.
Getting a piece, a virtual one at least, of your favorite celebrity is just a click away, with everyone from soccer star Messi to Korean boy band BTS joining the NFT bandwagon. Are celebrity-linked NFTs here to stay, or is this just a passing fad? Duke Liu, Executive Chairman of Spores Network, our very own NFT insider, is here with the download. Good to see you again, Duke.
Good to see you.
Duke, there's so much happening in the world of celebrity NFTs. Lindsay Lohan, after having sold an NFT of her persona, is now launching an experiential NFT. We also saw Taiwanese star Jay Chou launching his Fanta Bear collection, which bumped Bored Ape Yacht Club from the top spot in OpenSea's rankings. But do you think relying on celebrity fan base for NFT sales is a sustainable strategy?
7-8 months ago, when we had that massive boom of NFT projects, particularly in PFPs, you didn't really need any sort of branding around it, right? Whether it's community branding or celebrity branding, because there were so many cool projects coming out, and everyone was really trying to figure out what to collect. But we even see before the celebrities arrive a sense that there needs to be some sense of strong community. They're doing collabs between PFPs projects and their communities to grow, and trying to get your Discord group to fan base from 1,000 to 5,000 to 20,000. Before and during your launch of your project. With then what celebrity brings, obviously, is more firepower and more Web 2 people into Web 3. So the first consideration you have to make is the celebrity you're bringing in someone relevant to the Web 3 ecosystem, the current community. Two is that celebrity popular in the Web 2 community. Maybe Lohan's a bit more controversial, right? And we'll see how well that particular project with her does in the long term. Jay Chou, of course, he's the Asian superstar, crossover hip hop, a little Mandarin pop kind of vibe. Sounds like he's put it together with his team versus just being an endorser. That's going to have a lot more traction, and you can see that, right? Is that Fanta Bears is actually doing quite well because my guess is that Jay Chou and his team started by being kind of natives to the NFT community, buying up NFTs themselves, building out that community before making a launch of a collection like this.
Now, Nas, the Grammy award-winning rap star, recently dropped NFTs of 2 of his songs. The tokens, interestingly, came embedded with streaming royalties, giving the holders a possible lifetime of supplemental income. What do you make of that?
I love it. This is a true blockchain application, right? The music industry, as we know, is and on some level the movie industry is always broiled in rights and royalties payments. So if a musician who has ownership of his own catalog, whether it's prior catalog or new catalog, if they're willing to share that revenue through a blockchain-powered, streaming royalty, then you can imagine how loyal that fan base is going to be. We're moving more and more to fan engagement, community engagement. It's not just about, here's my digital merch, blah. It's about, hey, I'm actually closer to you than I was 15 years ago. It's a benefit for everybody. And it fits in that Web3's belief that why do the institutions have to control the money flow? Why can't the money flow go directly from the artist to their fans and back?
That's such a valid point, Duke, and that's where the next stage of fan engagement is headed. In the hot seat, Duke Liu, thanks as always. And that's the Daily Forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Megha Chadha. Until next time.